Welcome to Forecast IQ. As the world accelerates into the digital economy, we're going to help you stay ahead with the latest in Web3, crypto, and data. It's where we look beyond just the headlines to get you the insights and knowledge that help power smarter decisions. I'm Forecast Megha Chada. Well, let's kick it off then with Hong Kong, and Hong Kong's Web3 calendar has been chock-a-block with events, and today we come to you from the Hong Kong FinTech Week, where the biggest decision makers and regulators have converged to talk about the innovations, the opportunities, as well as the challenges that lie ahead for the digital economy. But before we get you more details on all that's happening in Hong Kong, the latest with Sam Bankman-Fried's trial in the United States. On Thursday, in just over 4.5 hours, the jury reached a verdict finding the founder and former CEO of the collapsed crypto exchange FTX guilty of all 7 counts of fraud and conspiracy. Bankman-Fried, commonly known as SBF, could face a maximum sentence of 115 years in prison. The New York court has set March 28, 2024 as the tentative sentencing date. After the verdict, U.S. Attorney for Manhattan said the case was prosecuted at lightning speed and will serve as a warning to fraudsters who think they are untouchable.
Sam Bankman-Fried perpetrated one of the biggest financial frauds in American history, a multi-billion-dollar scheme designed to make him the king of crypto. But here's the thing. The cryptocurrency industry might be new. The players like Sam Bankman-Fried might be new. But this kind of fraud, this kind of corruption is as old as time, and we have no patience for it.
But it's not the end of the road for SBF. As his defense attorney Mark Cohen said, the FTX founder respects the jury's decision but maintains his innocence and will continue to vigorously fight the charges. SBF was arrested last December and he pleaded not guilty earlier this year. The trial began in early October and it pitted testimonies of FTX's former executives and Alameda Research former CEO and also SBF's former girlfriend Caroline Ellison. You can find more details on SBF's conviction on Focus.news, but for now let's head back to Hong Kong. We're at the FinTech Week. Over 500 speakers, from Hong Kong's Chief Executive John Lee to City's Monetary Authority Chief Eddie Yeo to CEOs of major global banks, including Standard Chartered, are at the event. The decision makers in Hong Kong say that FinTech is entering a new era.
We are the only common law jurisdiction in China. You will know why Hong Kong is a FinTech future, a truly redefined future. Our strengths in financial services are wide-ranging and multifaceted. Hong Kong is Asia's asset and wealth management hub. The Hong Kong SAR government is committed to continuing rise of FinTech and is expanding research and reach and influence in Hong Kong and beyond. We offer unparalleled opportunities for FinTech businesses, for your businesses, to grow and thrive long down this 21st century of opportunities.
The Fragrant Harbor's moves to regulate the virtual assets industry and nurture innovation means Web3 heavyweights like Coinbase, Crypto.com, Animoca Brands and Yuga Labs, along with many others, are also making their presence felt at the week-long event.
For Crypto.com, the best news is that retail is included in the regime. Players have expressed concern and difficulty in opening bank accounts, and in addressing this, there was 2 roundtables that was held by HKMA and SFC to really encourage banks to bank crypto companies and also to be more open about the sector. We do see a change of attitude after the roundtables. Banks are more willing to talk to us, understand our operation.
Asia's marquee Web3 event is buzzing with over 30,000 attendees.
Hong Kong has always been a gateway to China, but as an international financial hub, it's actually stronger than Singapore, right? Because flow of capital, credibility, common law system. Even though both domiciles, Hong Kong and Singapore, uses common law, Hong Kong has better flow of capital. And also there's a China angle, right, into all of this. And we don't know, and people are saying that maybe ultimately when Hong Kong is allowed to do Web3, maybe China will follow suit.
Met a lot of startup founders, a lot of people who come here for events, and they say, oh, we want to move here because the nature and like the vibe, the community, the regulations, everything is in one place. And we only welcome more and more startup founders, fellow startup founders to come to Hong Kong.
I mean, it draws a lot of big firms. You can see really they put a lot of effort into it. I mean, all these booths here, everyone wants to be here. It's sort of a restart of it as well, right, because of the COVID years, and even last year I know it was quite a bit smaller, so this year is really going all out. And you have the international section with, you know, different countries exhibiting here in Hong Kong as well, so I just think it's a great experience.
Now, over the past 7 years, Hong Kong's FinTech Week has been the discussion ground for new and emerging technologies. And this year, it's artificial intelligence, or AI, that's taken center stage. Conversations about investing in AI and generative artificial intelligence, and also leveraging the technology to create a more inclusive world, are quite the hot topic.
You need to think from day -1, the safety, responsibility, the ethics, and we need to establish those muscles because we are a highly regulated industry and we want to do the things right. And this is many of the, especially Gen AI related areas are the new territories, and we need to be establishing the muscles to test and learn and really taking the controls around the risk as well.
Well, as the world rapidly evolves towards a new digital economic order, Hong Kong is establishing its position by taking proactive measures through innovation, policy and regulations. And Hong Kong has been creating a clear regulatory path for the Web3 industry and leads the region in fostering blockchain innovation and encouraging broad participation in a crypto-based financial ecosystem. And well, last week, community-driven blockchain platform Neo held the Hong Kong Web3 evolution with the finale of its APAC hackathon as the main highlight. We sent Focus Jenny Ortiz to cover the event on the ground in Hong Kong.
Government officials, venture capitalists, academics, entrepreneurs, and developers from all across Asia are here at NEO's HK Web3 Evolution. The event is exploring the future trajectory of the Web3 industry, as well as facilitating partnerships and collaborations. It also highlighted how Hong Kong is a global Web3 hub.
The very important things, I think, how we can, our community can deliver more and more real-life applications which can let all citizens, including the government, know Web3 can improve every people's life.
Hong Kong, from the beginning, has been one of the centers of crypto and Web3.
October 2022. That's when the Financial Services and the Treasury Bureau released a policy statement on the development of virtual assets in Hong Kong. 1 year on, the city has progressed on various aspects of the digital economy. Earlier this year, Hong Kong allocated 50 million Hong Kong dollars, or over $6 million US, for the development of its Web3 sector. In June, licensed cryptocurrency trading platforms were opened up to retail investors, and a slew of measures to protect individual traders were also put in place. A study by Forex education platform Forest suggests even named Hong Kong the world's most crypto-ready jurisdiction. The study also placed Hong Kong second among countries with the maximum blockchain startups. China's special administrative region has 3 blockchain startups per 100,000 people, which puts it only 1 rung below Switzerland.
We believe that Hong Kong possesses abundance of talents and technological advantages, coupled with the government support, making it poised to become a global hub for Web3.
HK Web3 Evolution is also the finale of NEO's APAC hackathon, which ran for 3 months starting in July this year and has seen around 100 teams competing across 5 cities in Asia, namely Tokyo, Japan, Ho Chi Minh City in Vietnam, Bengaluru in India, Seoul, South Korea, and Singapore. A prize pool worth $120,000 US and a post-hackathon grant fund from the Web3 Global Acceleration Program amounting to $1 million was at stake.
In the past, we lack of some infrastructure level innovations. And the reason why we do hackathon here, why we operate this funding program is to encourage people to do more lower level, under the hood infrastructural buildings.
The second bit I just want to quickly touch on is about how we look at talents or community or ecosystem as an important initiative of Hong Kong governments. Now, naturally, in this upcoming era, 20 years and longer, it's really about competing on talents.
If there's one thing that this event proves, it is that Asia is home to some of the finest developer talent in the world.
The highlight of the hackathon is always the talent. It's always the people. It might not be something that will take off very soon, but it's the inspiration. We can feel their passion about crypto, about Web3, about building a new world with new order.
Web3 industry has been hit by crypto market downturn and collapse of major digital assets firms such as 3 Arrows, Terraform Labs, and FTX over the last year. For developers, both private and public sectors play a role in ensuring that the industry can rise from the ashes.
So I would say during the bull market, a lot of projects were able to self-fundraise using IDOs and public sales. But as liquidity is kind of dried up in the market, we as developers really have to try and bootstrap using hackathon grants or ecosystem grants from the various blockchains and rely on VC funding. So it is a very much important part of development.
By the government is much more generous. They ask actually no equity, no token share, but they hope you become successful and bring much more like a creator sector or kind of momentum to Hong Kong.
As blockchain technology continues to mature and develop, Hong Kong's Web3 future promises to be a dynamic landscape of innovation, not just in Asia Pacific, but in the whole world. In Hong Kong, Jenny Ortiz, Forecast.
Time for a quick break then, but we'll check in on the NFT markets when we return.
Forecast News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. We go to where the action is, from Asia to the world. Forecast is the most reliable source of intellectual discourse and insight that informs, educates, and bridges the gap between the blockchain industry and the mainstream. The future is being built, and Forecast has it covered. This is Forecast News.
Thanks for staying on with Forecast IQ. Now, NFT wallet app Backpack announced it will launch a cryptocurrency exchange called Backpack Exchange after receiving a license for exchange services from Dubai's Virtual Assets Regulatory Authority, or VARA. Backpack is best known for its executable NFTs or XNFT and the Mad Labs profile picture or PFP collection on Solana. Backpack Exchange is set to go live in the first quarter of 2024 and opened a waitlist registration earlier this week. Well, what else is brewing in the world of NFTs? Let's find out from Forecast Labs data analyst Yehuda Pester. Yehuda, what are you spotting?
Well, for the first time in a long time, months even, the Forecast 500 NFT Index is reflecting an extended time in the green. That's both in 24-hour periods and also in the week. Yes, there's certainly been a change in those NFT markets, many feeling that the all-time low prices in many NFT collections are just too good to pass up on at this point. Is it a Halloween treat, or is this ultimately going to play out to be a trick? We'll find out over the next few months. All kinds of factors are impacting the market right now, including the still very high prices of crypto, and ultimately the fact that many traders finally have liquidity after months of no profits. Above all, liquidity is king when it comes to what drives trading action. And the real takeaway from the past few months in NFTs is that traders finally do have some money and they're absolutely willing to spend it on NFTs. NFT sales volume last week finished at over 85 million. That's the first time we crossed the 80 million threshold in 8 weeks, the highest sales we've seen now in 9 weeks. And there's lots of interesting numbers showing up in the data last week, including that the month of October broke a 7-month skid for monthly NFT sales. Really, it's been a big few weeks and a big month for NFTs. The average sale price of NFTs hit a 4-month high, climbing to just over $60. That's, of course, again, thanks to the rising price of crypto. But we also saw a year low in NFT transactions. Combine those two and it becomes clear it's expensive NFTs that are beginning to trade hands, driving up that average sales price. What's interesting to me is the direct correlation of wash trades returning to SoFi platforms starting to fizzle out. FinTech in particular really struggling to cross even $1 million in sales volume multiple times over the past week, and Stars Arena now very public controversy brewing with their CEO calling it quits, other team members being kicked off the project, one even threatening to expose some of the inner workings of the Avalanche Blockchain's team. The total value locked for SoFi platforms down across the board, but it's Stars Arena who's bearing the brunt of those losses. Again, it's just driving traders right back to NFTs. Wash trading hit a 15-week high last week, climbing to a whopping 58 million. It's a number we've not seen since before FinTech launched. And the return of those traders, bringing with them some very large NFT sales, like Azuki 3309, that sold for 115 ETH, roughly $204,000, and DGods 3251, that is the rarest NFT in the DGods collection, that sold for $196,000 to Free Lunch Capital, that is the creator of the Flooring Protocol. Now, with all eyes on legal proceedings in the crypto world, SBF taking the stand, of course, in the ongoing FTX lawsuit, well, the NFT world has some legal news of its own. A judge last week ruled that an artist named Ryder Ripps and his business associate Jeremy Callan, they have to pay Yuga Labs over $1.5 million for infringing on Yuga Labs' trademark. Last year, Ryder Ripps and Jeremy Callan released an NFT collection called the Ryder Ripps Bored Ape Yacht Club. The collection not only used all 10,000 images from the Bored Ape Yacht Club collection, it also used the Yuga Labs logo as well. The pair claimed that Yuga Labs didn't own their own trademark, which is true, and also that the Ryder Ripps Bored Ape collection, it's a form of appropriation art. The judge did not agree, and now the case will probably serve as precedent for NFT collections who use others' art for their own artistic statements. Alright, it wouldn't be a week in NFTs without some exciting art news, and we did see a pair of big art stories, both revolving around one artist who goes by the name of Snowfro. Snowfro, also known as Eric Cauldron, released a new art collection in partnership with Red Bull Racing and their extremely popular generative art Velocity series. And that's not the only news on the Snowfro front last week. He was also announced as the latest artist to collaborate with Jack Butcher and Jaleel in their Opepin art collection. That collection, by the way, Snowfro likened to a digital art museum. It's really interesting. Now, Snowfro's set in the Opepin collection brought the highest demand we've seen yet from collectors of Opepins, and already it's fetching a premium on secondary markets. And a bit of a poetic end to the art news here. Jack Butcher, who I just mentioned is the creator of Opepins, well, it seems that he's going to be the next artist in that Red Bull Racing Velocity series. Now, like I said, the NFT markets come roaring back this October, but it wouldn't feel like we're really back unless there was an NFT party. And Yuga Labs, well, they're throwing that party. It's called ApeFest 2023, coming to Hong Kong this week. So you have the biggest native Web3 brand coming to Asia, a location that many think will be the driving force behind the next NFT bull market. So expect parties and talks from some of the most prominent Bored Ape members and some of the biggest builders in all of Web3. If you can't make it to Hong Kong, don't fret. The damn show is going to be broadcasting a lot of those events live on YouTube, just like they did with Beeple's CryptoPunks party. If you've not seen an NFT event, definitely worth checking out.
Yehuda, thanks as always. Well, on that note, let's take a quick break and we'll talk about a big push towards crypto from one of Thailand's largest banks on the other side. Don't go anywhere.
Forecast News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. The future is being built and Forecast has it covered. This is Forecast News.
Welcome back. Now, tokenization is getting a boost in Singapore this week. On Monday, the Monetary Authority of Singapore, or MAS, the Lion City's central bank, announced it's partnering with 3 other countries for digital asset pilot programs. The partnership with the Financial Services Agency of Japan, the Swiss Financial Market Supervisory Authority, and the United Kingdom's Financial Conduct Authority aims to advance legal discussions on digital assets, find potential policy loopholes related to tokenized solutions, explore a common standard for the design of digital asset networks across various jurisdictions, among others. The MAS has also collaborated with over 15 financial institutions on the industry pilot programs related to tokenization of foreign exchange, fixed income and digital asset management products through its Project Guardian. Over in Thailand, the country's second largest bank by asset, Kasikorn Bank, also known as K-Bank, has acquired a majority stake in the parent firm of cryptocurrency exchange Satang. The deal was worth almost 4 billion Thai baht, or roughly $10 million. The exchange will be rebranded to Orbix Trade, and 97% of its shares will be held by the bank's freshly established division called Unita Capital, which will be investing in digital asset businesses. The bank also opened 3 additional subsidiaries: Orbix Custodian as its new crypto custody wing, Orbix Invest, a fund manager, and Orbix Technology, a blockchain development firm, each of which are also going to be housed under Unita Capital. On to markets then, and Bitcoin's had quite a remarkable October, surpassing the $34,000 mark, gaining over 26% in the month. Much of that bounce has been attributed to the prospect of the US Securities and Exchange Commission greenlighting a spot Bitcoin ETF. An approved ETF could open the floodgates to institutional investments, potentially injecting $1 trillion into the crypto market. But will November look as good? Let's ask Sumit Gupta, founder of Indian crypto unicorn CoinDCX. Sumit, welcome to the show. It's good to see you. Well, this week marks the 15th anniversary since Satoshi Nakamoto released Bitcoin's white paper. The question on everyone's mind, will Bitcoin's winning streak continue?
All these signs that I see are fundamentally strong, with ETF already in the pipeline, and quite possible that we'll see some good news there by the end of this year or early next year. I think all of these things are a good sign for us, for the industry to attract smart institutional capital.
Crypto exchanges are facing a liquidity crunch. About 60,000 Bitcoins were removed from the trading platforms in the past 90 days. How do we inject liquidity back into the crypto ecosystem?
With FTX fiasco, a lot of people were very skeptical about keeping their funds earlier, on exchanges. But I think there needs to be a high bar or high standard that exchanges need to set up. I think regulations will solve one aspect of that, where there will be regulated exchanges. But I think also, while that happens, exchanges talking about proof of reserves, proof of liabilities, all of that becomes extremely important. We have had this challenge in India.
You have launched Octo, a self-custody crypto wallet that is now live in 60 countries. What was the thinking behind it?
I think for us to really drive mass adoption of Web3, the industry needs a simple wallet experience like this, which people can use and still be comfortable, like they were, ordering food online or they were doing shopping online. The wallet experience has to be simplified, and all the complexity of wallet has to be abstracted out, putting in the background as a backend. But in the front end, what people see is a simple application that they are used to already. So I think that's basically the objective with Octo, and we will continue to invest more in that.
And which altcoins are you bullish on?
We have 10,000 plus tokens that are out there, right? Not everything is high quality. So I think there will be a shift of focus and capital and investment towards blue chip stocks to begin with. And as regulatory clarity emerges, as these other altcoin projects start to get that recognition, I think that also reduces the risk, and then more capital may follow there. I think Ethereum is also doing a lot of progress over the last. Actually, in this year, we have seen a lot of L2s coming up, primarily built around Ethereum. I think that is also going to drive a lot of new use cases.
Tokenized US Treasury market has grown nearly 600% to $700 million as crypto's real-world asset raise intensifies. What's driving this interest?
The overall industry has been looking for a killer use case, something that can actually touch the current Web2 world and the physical world. I think most of the adoption right now has happened around stable coins. I mean, like top 3, after Bitcoin, Ethereum, right? Because they actually unlock a lot of values. I see a trend where people will go off-chain to on-chain. A lot of assets are there which are locked in the physical boundaries. If they come on-chain, there is very high value that can be unleashed, either in terms of the liquidity or the composability in the other sort of asset class. I think.
Now, in India, despite a government-imposed 1% TDS tax on crypto transactions, global crypto grassroots adoption is climbing, according to a Chainalysis report. What's driving crypto volumes in the country?
Overall, I understand the intention behind putting in TDS. I think that was that was a move which was by the government to understand the numbers to track and trace transactions, but unfortunately and unintentionally, it has encouraged users to resort to alternative channels like offshore players. I think that is something that defeats the purpose, and we are we have seen a decline of more than 90% in volumes, more than 90%. That's a huge, steep decline. And what we've seen is that India continues to be number one when it comes to grassroots crypto adoption.
And by when are you expecting to see crypto regulatory clarity in India?
Sometime in the next 2024 second half or 2025 is when I see some concrete steps taken on that. I think that will not be just TDS alone, that will combine with some sort of guidelines around customer protection, some guidelines around taxation revision, also some guidelines around token listing, overall regulations. And until that time, we are having self-regulations, and we'll continue to work towards customer education, awareness, and pave the way for a vibrant and innovative Web3 ecosystem here in the country, because we believe in the long term, India is going to take the center stage when it comes to Web3 revolution because of its demand, number one in terms of adoption.
Sumit, thanks so much for joining us today with those insights. And well, with that, it's a wrap on this week's show. Thanks so much for tuning in. Remember to like and subscribe to this video if you're watching us online, or stay tuned right here on this channel if you're watching us from home. It's easy to stay connected with Forecast for the latest developments in the world of Web3 and crypto. I'm Forecast Megha Chadha. Join us again this time next week as we bring you the latest from the world of Web3 and why it matters. Forecast IQ. Get intelligent in Web3.